This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, October 23rd. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's do our week in preview. Needless to say, we had a bit of volatility today and last week, as a lot of the economic focus seems to be on who will be President Trump's nomination to actually head the Federal Reserve. Last week, Mr. Trump was talking about John Taylor, who is an academia from Stanford, and it was written a very interesting rule called the Taylor Rule on how to calculate where interest rates should be. And if you know how this calculation works, you would assume at this point that Mr. Taylor is without a doubt a hawk, because if you use the calculation based on his theory, interest rates should be well above 3%. Then what happened was Mr. Trump started to lean back towards Mr. Warsh. Then what we saw is a little bit of a change as Mr. Trump started to think that Mr. Powell might be the best choice. And then suddenly today, Mr. Trump thought Mr. Cohen could be the best choice as far as the Fed chairman was concerned. So a lot of changes along the way, but the bottom line was after all of this was finished, he finally came out and said that Mrs. Yellen is doing a great job. Now let's review what this activity actually caused. Last week, we saw the dollar rally and test that 94.10 resistance area, and then we saw a bit of a pullback. When Mr. Taylor was considered suddenly to be the front runner, gold and silver both sold off, gold testing as low as 85 and silver going all the way down to 1687. Then suddenly when we switched back to Mrs. Yellen potentially being the Fed chairman again for another term, the markets rallied back to the upside. Interestingly enough, today, when Mr. Cohen was potentially the choice, both gold and silver made new multi-week lows, retesting a very key support level right at the 100-day moving average. For gold, that was 1278, and for silver, that was 1687. And then, when Mr. Trump flipped back to Mrs. Yellen doing a great job and potentially going for another term, the market rallied quickly back to the upside as the dollar sold off. The interesting thing right now is if you think about all the things that are taking place, obviously this one variable means a lot to the market in the short term. But what does it mean in the long term? Inevitably, the Fed will be forced to potentially raise interest rates at least one or two more times. How will that affect the economy? And will they have the capacity to actually pare down the $4.5 trillion balance sheet? Obviously, here in the United States, we're talking about being a little bit more hawkish in comparison to where we've been as far as monetary policy is concerned. But if you look at Europe, they continue to be very dovish. And over the weekend, Prime Minister Abe in Japan was reelected in a landslide. And if you know anything about his policies, he's extremely dovish and believes that they should continue to print and keep monetary policy very loose. The bottom line right now is all of the sovereign debt issues throughout the world are being actually magnified because of the negative interest rate policy that exists in many other places than the United States. And if the United States is suddenly going to become much more hawkish, this could potentially push the dollar through key resistance. And seasonality-wise, it's not unusual to see the dollar rally in October, November, December, and January. Let's look back to last year. The dollar was trading as low as 96 in the beginning of October. By January, the dollar had peaked at 104. Obviously, this was a major constraint as far as the bulls were concerned in precious metals, as gold and silver went back down and made lower lows as far as 2016 was concerned. So today, we tested the 100-day moving average in gold at 1278. We tested the 100-day moving average in silver at 1685, and the 100-day moving average in the US dollar sits at 94.15, and the neckline of an inverse head and shoulder bottom sits at 94.30. If we see a hawkish leader as far as the Fed is concerned, the dollar could easily break through that 94.30 resistance level and trade upwards of 97 to 98 in the coming weeks and months. What would that do to precious metals? Most obvious in many people's minds is it may force the metals markets to retest the recent lows, silver in the 16.15 range, and gold all the way down around 12.45, 12.35. What lies out on the horizon is something that we'll soon find out, but the bottom line is the long-term implications of the sovereign debt crisis that exists throughout the world is incredibly long-term bullish for individuals that wish to own precious metals. If you're looking for an opportunity to add gold and silver to your portfolio, give us a call so we can explain how you can work the best possible price to add this incredible asset to your portfolio, take delivery of gold, take delivery of silver, and know why this is a commodity that will make you sleep better at night, and in the long run, I think it will help protect your portfolio. Give us a call today. Thank you.